Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate mumbo jumbo and figure out if a company is truly innovating or just innovating their way to a mess. Today we're diving into BlackBerry's latest financial report. Stick around, because this one has more twists than a pretzel at a yoga convention. And hey, if you dig getting the real story behind these filings, make sure you are subscribed and check out our Discord community linked in the description below. Alright, let's get straight to it. BlackBerry is reporting its quarterly earnings, and naturally, eyes are on the numbers. Were they a slam dunk or a foul shot? So, looking at their balance sheet, which is like a snapshot of what the company owns and owes, we see about $1.2 billion in assets on the 30th of November, 2025. That is down a bit from about $1.3 billion back on the 28th of February, 2025. This little dip is mostly because they had less in short term investments and accounts receivable. It is not a huge drop, but it signals a tightening of their cash flow or a deliberate shift in their investments. One thing that stands out immediately is the number of shares. They had over 590 million shares outstanding at the end of November 2025, which is actually fewer than they had at the end of February 2025. This suggests they've been buying back some of their own stock, which can be a good sign that management believes the shares are undervalued. Or it could just be a way to boost earnings per S-hair. Now, let's talk about how much money they actually made or lost for the 3 months ending November 2025. Their total revenue was about $141.8 million. That is a tiny bit less than the $143.6 million they brought in during the same period in 2024. Not a big change there, but the big news is the profit. They actually reported a net income of $13.7 million for that quarter in 2025. That is a huge turnaround from a net loss of over $10 million in the same quarter of 2024. This is a really positive shift, and it suggests things are moving in the right direction. However, a big chunk of that turnaround is due to the fact that in 2024 they had a massive loss from discontinued operations. Those were the cybersecurity solutions from their Silence business, which they sold off. So, while it looks like a great comeback, it is partly because they shed a money-losing part of their business. Looking at the bigger picture, the first 9 months of 2025 showed total revenue of about $393.1 million, almost identical to the $393.2 million in the same period of 2024. But here is the kicker. They are now reporting a net income of almost $29 million for those 9 months in 2025, a massive leap from a net loss of over $71 million in 2024. Again, boosted by shedding those discontinued operations. Let's break down where the money is coming from. BlackBerry operates in 3 main areas: QNX, secure communications, and licensing. QNX, their embedded software business, is doing well. With revenue up significantly, this is their automotive software division, and with more cars needing smart systems, it is no surprise. This is a bright spot. Secure communications, on the other hand, saw a dip in revenue. This is their business for governments and critical industries, handling things like security software and emergency alerts. While revenue is down a bit, their adjusted EBITDA, which is a measure of profitability before certain expenses, actually went up slightly. This implies they're managing costs better in this segment. Licensing, which is basically them making money from their patents, stayed pretty steady, showing a small decrease. It is a consistent performer, but not a major growth driver. Geographically, North America is their strongest market, accounting for nearly 46% of their revenue in the first 9 months of 2025, showing a nice increase. Europe, the Middle East, and Africa saw a slight decrease, making up about 34% of revenue, and other regions remained relatively stable. Their gross margin percentage, which is the percentage of revenue left after accounting for the direct costs of producing their goods or services, is looking pretty solid, around 75.5%. This is a good indicator that they are efficiently managing their core product costs. Now, if we look at their adjusted operating income margin, which is a non-GAAP measure that tries to reflect their core business performance by excluding certain items, it is sitting at about 15% for the 9 months ended November 2025. This is up from 13% in the same period last year. That's a good sign of improving operational efficiency and their adjusted EBITDA margin. Another non-GAAP measure focusing on operational profitability is about 18%, up from 16% last year. These adjusted numbers tell a positive story about their underlying business health. They're also highlighting their secure communications annual recurring revenue, or ARR, which is the annualized value of their subscription and contract revenue. It is holding steady at around $216 million. However, their dollar-based net retention rate, or DBNR, is at 92%. This means that for every dollar of revenue from customers a year ago, they are now generating 92 cents from that same group. A DBNR below 100% typically means they are losing some revenue from existing customers, either through churn or downgrades, even if they are acquiring new ones. Looking at operating expenses, they've managed to bring them down a bit in the first 9 months of 2026 compared to 2025. Research and development costs are down, and general and administrative expenses have also decreased. However, sales and marketing expenses have gone up, which could indicate a strategic push to acquire new customers or expand market reach. On the cash flow side, they generated positive cash flow from operations in the first 9 months of 2025, which is a big improvement from using cash in the same period of 2024. This means they're generating more cash from their day-to-day business operations. In financing activities though, they used over $31 million in the first 9 months of 2025, mainly due to buying back their own shares. This is the second time we've seen them buying back stock, which we discussed earlier. When we look at their future obligations, they have about $318 million in expenses coming up over the next year or so. This includes operating leases, purchase commitments, and debt payments. A significant chunk of that is for their 3% senior convertible notes, which are due in 2029. This is something to keep an eye on, as managing their debt load is always important. It is interesting to note that their operating lease obligations are pretty manageable, with only about $11 million due in the next 12 months. And finally, their stock buyback program is still active. They purchased over 900,000 shares in November 2025 alone as part of their announced plan. This shows a continued commitment to returning value to shareholders through buybacks. So what is the story here? BlackBerry is definitely on an upswing, especially when you look past the discontinued operations. Their QNX business is strong, and their focus on secure communication seems to be paying off in terms of profitability. Even if revenue in that segment is a bit soft, they're cutting costs in some areas while investing in sales and marketing, which could be a smart move to drive future growth. The stock buybacks are a positive signal and their cash position looks healthy. However, that DBNR in secure communications below 100% is a little concerning. It suggests they might be struggling to keep all their existing customers happy or to upsell them effectively. Also, while they're making a profit now, a lot of that is thanks to shedding old businesses. We need to see sustained organic growth from their current products to be truly convinced. Overall, BlackBerry appears to be navigating a complex market successfully, shifting its focus and showing signs of improved financial health. They are clearly making strategic moves that are starting to pay off. The big question is whether they can maintain this momentum and continue to innovate in the rapidly changing tech landscape. Alright, that is our breakdown of BlackBerry's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.